them nicely positioned. Just want us to have a look at all the exchanges. Let me get the volume data on. I think volume is quite important. I just want people to see what's happening on the higher time frame. I think it's really important that we have a higher time frame appreciation of what's happening with this token. I remember people realize how important the higher time frame is, and actually it drives everything. And the reason why I'm looking at all the exchanges is because the volume is spread across 4 different exchanges, and there's not, even though one exchange might have most volume, not one exchange is driving the price right now. It flip-flops between different exchanges. Sometimes you're going to get higher volume on maybe MEXC, and that's driving the price, and sometimes it's going to be on KuCoin, and sometimes it's going to be on Gate.io, and maybe rarely it's going to be on Bybit. And so it's always good to have a look at the different exchanges, because you might form a bias on one exchange and then actually your bias is wrong because the volume is coming elsewhere and your exchange is only following, it's not leading. Okay, so you're not getting the up-to-date information before it already happens. And you're right now on the monthly time frame, what you can clearly see, and this is the higher time frame. So you've got KuCoin here, which launched in December, and then the rest of these exchanges, they launched in November 21. So with the KuCoin price, you don't have the initial exchange launch, which was at 9 cents in these, in Bybit, in Gate, and in MEX. In KuCoin, you had a launch, and then actually what happened was there was an immediate sell-off. Whereas with these other exchanges, you had a launch, there was a little bit of buying frenzy for about 1 or 2 days, and then it sold into that. Okay, that's why you have these initial big green candles, and then you have the continuation, which is where these candles align in December. So the alignment begins in December, and not KuCoin, but all these other exchanges, they actually started off at a higher price because they were already trading at a higher price before they sold off. And that's why there's a slight difference where these ones have a larger expanding candle to begin with. That's just to explain the price action. So the token launched at the end of the last bull market. So it launched in November, which basically is when Bitcoin peaked in 2021. And naturally, this token has just experienced the wrath of the bear market from day one. Yeah. So in my mind, that's already quite bullish. It's bullish because if this token was weak, it would have flopped within the first few months. If this token was a meme or a scam or some kind of bullshit rug pull or whatever is out there, because of when it launched at the beginning of the end of the last bull market, and it's already endured the whole duration of the bear market, and this is not a small period of time that I'm imagining. We're looking at potentially all the way through to October. We're looking at 23 monthly bars. That's basically 1 year and 11 months, 2 years. It's endured 2 years of bear market, and I think for a coin that hasn't actually expanded in the previous bull market, and so there's something you have to understand about previous tokens. A lot of tokens which already expanded in the previous bull market, what the tokens were able to do were they were able to sell into the expansion of the last Bitcoin bull market, and then they are able to use the capital raised from the expansion in highly elevated prices. They were able to use the capital which they were able to sell into those higher prices to sustain the project through the course of the bear market. Yeah, and that's how a lot of these projects either grow or how a lot of these projects die. And it depends, because if the founders or the people who launched the project or the tokens take their value and they don't put it back in, i.e. that they rug pull the project or they run, then you're going to get a dead project in the bear market. And then those who are willing to put it back in and keep the project going because they're looking for a higher time frame end game and end goal, then those are the ones that are still around now and are starting to pump. This project is very different because it didn't have that opportunity. There were no higher prices in the previous market. Yeah. So even from launch, it priced to the peak. It did go up on Gate. And let's not take Gate. Let's take MEX because that was the most correct. That's the most volume on the first instance. That only went up about between 10 to the peak. I don't know, probably 12 or something, 13x. And something you have to understand is that a lot of these investors who invested in the first instance, they extracted their value because it was the end of the bull market and they didn't put it back in. They were just looking for a quick flip. It's like flipping property. They were just investing early, flipping their value, and then they were just, that was their payday basically. And unfortunately the timing was not favorable. But I think what's important is that this project has actually not only survived, but it's actually thriving for the duration of this bear market. And that's something to bear in mind. Like, we made an all-time low last year in December 22, and we came back to test it, and now we're coming out of the lows. And that's what I'm seeing now on all of these exchanges. You see how we had the bear market sell off, we had our relief rally, and then we had a sell off to test the low, and now we're coming out of the lows. Yeah, we're finally coming out of the lows. And in the context of Bitcoin and the bull market, it's quite bullish, the kind of behavior that I'm seeing now, the fact that we've coming out of the lows, and all the exchanges are suggesting the same thing. The other thing that I'm seeing that's quite interesting is that increasing buy volume now. So if you look at Bybit down here, you can clearly see that we have in the last 3 months, the current month being February, we've been having increasing volume. So where the volume here on average is either down here or at the most here, with now the last 3 months, we've seen significant increase in volume on Bybit. On Gate, it's slightly different because on Gate we had a little bit of a frenzied volume buying here. But apart from that nuance, if you look at the average, we are kind of trying to increase. There is a little bit of increase here in the lows. There's a little bit of an increase. And on MEX, it's on par with the normal volume. And then on KuCoin, we are now starting to see some kind of potentially an increase. So last month there was a significant increase, and this month we haven't put in as much volume as the last 2 months, but you can see now that the volume is a consistent buy volume. It's a consistent volume. This is something to bear in mind. I think it's quite bullish what I'm seeing now. It's not like so crazy that it's beyond obvious, so that's why I'm kind of pointing it out. Yeah. What happened there? So that's something to like look at. And then the other thing that I'm seeing in the charts is I'm seeing a trend reversal now. And so I've done this quite often in the past, and if I was to like just inverse these charts, just show you the inverse, and like if this was how the chart was and you were looking to buy this, I'm just thinking to myself, would anyone buy here? Is this where you would buy? Where would you be thinking to buy? And I think it's easier to look at charts when they're inverse, and when now instead of thinking of selling, you're thinking of where you would buy, because then you can reverse it to the opposite kind of perspective. And so I think most people looking at this would be scared of buying. And if you think this is the inverse, then you can reverse the idea in terms of how this is the inverse. And the reason why is because it looks like it wants to go down. It looks like finally the trend is reversed. This is something to consider. Like I feel like we are reversing this trend, and I said last month that these inverse hammers in the lows were bullish because of the context of these candles being in the lows. They were bullish candles. Inverse hammer, inverse hammer, inverse hammer. These are bullish candles because of the context of these candles being in the low, and because of the volume that's coming in with these candles. And so ever since I spotted these candles back in November, actually, this red candle, the price is already up 100%. 100%. So if you look on my Twitter, you'll see I was identifying these bullish candles, and we're up now. In the context of the wider crypto market, you might say, well, that's nothing because other coins have pumped. But there's a difference here, and the difference is that we're talking about higher time frame market structure at the lows. It's a very different chart to a lot of these other charts which have just launched and are just pumping into price discovery, because we're looking at a project which is a long-term project. It's already survived the bear market without any kind of significant capital raising event apart from the initial launch, whereas a lot of these other tokens have increased in value 50x, 100x or whatever, and have failed, whatever. Yeah. And so I think that's quite a good signal for most people. When you're looking to invest in this, it's quite a good signal that it survived the bear market, thriving, coming out of the bear market, coming into the bull market. I think there's a lot of that should give most people confidence. We're coming out of the lows now. We're at major levels of resistance. You can see on the horizontally, all of these exchanges are right now, we're coming against the horizontal resistance level. And the horizontal resistance level is the previous lows and the previous highs of these monthly candles. Okay, we're at that now. We're at that point now on all these exchanges. And that's going to flip. I can't tell you when, but eventually that line will flip into support, and this will then start to rally, and will no longer be in the lows, will be above support, making higher highs. Eventually it's going to happen. Yeah, in the context of this bull market, it's going to happen. So I think this is a really good opportunity for people to have a look at and kind of really give this like a higher time frame view on this project. Go and do your research, go and have a look at the website, go and look at the fundamentals. I've made a crap load of videos. Have a look at my videos, and if you have any questions, I'm happy to answer them in Telegram or in the comments or wherever, really. So I'm kind of like really, I'm looking at this and I'm going, despite this increase in value over the last few weeks, I'm still really mega bullish on this. Like when I'm looking at this, even though we're into resistance now, I'm not feeling bearish. I'm thinking actually it looks like we might be on the point where we could break up. It's possible. It's looking like it could happen. And we're just waiting for that moment where we do suddenly get an increased injection of volume, and where the price does eventually break up. Okay. So I think, has anyone got any questions about what I'm saying? Good morning, B. And B is absolutely correct. TRVL is still underneath the radar. I think a lot of people don't really I think the problem is this: there's a lot of hype, and people are attracted to pumps. But I think eventually what will happen is once Dtravel launches some of their really highly visible front-facing products, i.e. Sensei and some other things, then it's going to capture people's imagination because of the application being a peer-to-peer application, which is being used now, like in a real world use case, which has a real world application. And in my imagination, what I'm thinking of, because Dtravel is a DAO, and because the application is a decentralized application, peer-to-peer, which has a real world use case, which works and has a real need too. And that's what people don't realize. Like, this isn't an application where we hope that people will use. It's an application that we know people are looking to use and are using now, and more people are getting interested in it, just simply because a large portion of the world who are Airbnb or booking or a VRBO are tired of the fees. There's quite a large amount of fees in using these centralized platforms, and the great thing about a decentralized application is that it's significantly cheaper, and you have all the other benefits too, which comes with a Web3 application. But I think because we've survived the bear market, and because now we're coming into a new cycle of a bull market, I honestly think that it's very unlikely in the future when so let me just go back to one chart now so it's a lot clearer. So I'm back on KuCoin. I think it's very likely in the future, and this is the KuCoin chart, so it's, the all-time high is much higher, but eventually if this price does make a high, I think it's very unlikely that we'll go back down to the all-time low. I mean, that's very unlikely. Yeah, I think that's very, very unlikely, especially because you're talking about a really small market cap. Like if this token has survived the bear market with being such a small micro cap, without the crazy expansion that most tokens had to raise a large treasury in the previous bull market, and if this token manages to get to an all-time high where the treasury can extract some value, and also where people like myself or others like yourselves listening, you do take some profit into the highs, and we do make an all-time high, it's very likely that me and others and the same people will be looking to put that value back in a future bear market and defend the price if the price retraces to form a higher low. And so in my mind, I'm thinking that obviously it depends on how high we are able to get in this bull market. I don't think we're not going to make an all-time high. I don't know how far we're going to extend yet. I'm very confident that we will make an all-time high. And so that's why I'm not looking to take profit in the lows. I'm looking to take profit in the highs. I think the run will become later as the momentum builds. But then I also think that when we do make an all-time high in the next bear market, people like myself will be looking to reaccumulate. Yeah. And I don't know how high it's going to go. No one can predict that. But then it'll be easy to find areas of reaccumulation, and it'll be easy to defend the lows, because the people who have extracted value at the highs, which is going to happen with most tokens in the next bear market, a lot of people will be looking to pick up the token at the lows. That's just going to be normal behavior. Yeah. I can't imagine if we do go up to 2, 3, 4, 5, however high, no one can predict this. I'm thinking if I was looking at the MEX chart, which has the correct fib extension levels, I still have in my mind, just not even looking at anything else, just looking at fibs. I am thinking $5.1 and 9. I am thinking that. I'm not like, I think those are within reach personally. And the main reason why I think that, because when you're in price discovery, there's pretty much no volume and the price moves very fast. And also people get really bullish in price discovery. And the reason why people get bullish is because you're making a higher high. People like higher highs. Yeah. And people will look at this chart and they'll go, wait a minute, we've just made a higher high. And they'll be thinking to themselves, higher prices. That's what people do. They get really bullish in the highs. So I don't think it's out of the question for us to extend at the very least to between $5 and $9. And then my point is this, that if you're at the lows now and you extend to $5, that's 100x. 100x. Yeah. And then if we do get a pullback and we've made a higher high and you get a pullback in the next bear market, yeah, be easy to reaccumulate. Be easy to reaccumulate and hold the price up. And then you'll be looking at the next bull market. Yeah. And the thing about this project is that it's not like a centralized application run by the DAO. I'm not employed by Dtravel. I've never received any payments from Dtravel at all. I'm just an Airbnb superhost, been doing Airbnb for over 10 years. And I've seen this application change my business in the real world. And that's why I'm so excited about this, because I see this application as a forever application now. Of course, in the future, it has to become even more decentralized to the point where all the code and everything is decentralized. It's just out there. And so there's no like central entity. It's just the whole thing is decentralized. Yeah. And that's a transition, and that's going to come with future technologies and the Web3 idea evolving and becoming true Web3 down the line. We're in a transition stage between Web2 ideas and Web3 ideas. In the future, you're going to have DAOs potentially run major aspects of the world effectively. They're the future companies of the future, DAOs. Yeah, especially when they're decentralized applications where you launch them into the cyberspace and they just work and they just function. That's what I see with this. I see this as a long hold. And I think down the line, the tokenomics will become more and more important, but much more important is the idea of distribution and reaccumulation, because you want people to sell into the highs and then buy back into the lows. And I think people will do that once they see the application growing, more interest picking up, the business side of it growing and developing as well. But anyway, that's kind of what I'm thinking about higher time frame for this. I think it's a really great place to buy, actually. When I look at these higher time frame candles, this is the third bullish month in a row. Yeah, I can't imagine us making a red candle this month. We're still basically at the lows. You're buying now the same price as October 22. Yeah. And eventually this key level, which is the launch price, will flip as support, and then that will be the floor. The floor will be made. Now, I can't predict how this is going to happen. I can't predict if we go up and then down one more time. But whatever we do, it's going to look bullish when we break out. Yeah. Whether we break out now or in the future, it doesn't really matter, because if we were to break out now, then we've completed an Adam and Eve bottoming pattern, yeah, which I have here. I'll show you. We break out now. We've completed an Adam and Eve bottom pattern. Yeah. With the neckline being 9 cents effectively, or maybe a little bit higher because you have to make a higher high. Okay. So maybe a little bit higher. So effectively that's your Adam and Eve pattern. Breakout, back test, and expansion. So this is going to be, why does this do this? I have no idea. It's so annoying. My computer's gone berserk. Sorry. Oh my God. I'm having a nightmare. Sorry about that. I'm just trying to delete some brush stroke. I usually do undo and it doesn't. And then the other thing is if we don't break out, and for whatever reason, this neckline doesn't give way. Now it's quite subjective where it is, but let's just say it's an area. And we come up to find resistance, then you're potentially looking at a higher time frame inverse head and shoulders, which is also crazy bullish. Like we're looking at bullish, but a bullish bottoming pattern right now. Now I can't tell you if we're looking at an inverse head and shoulders, if we're looking at an Adam and Eve, or if we're looking at a Wyckoff accumulation as well, which is what I'm schematic, which is what I've been drawing out, and I've kind of marked it off. The thing about Wyckoff is that it's never going to be an exact copy of the Wyckoff schematic. The Wyckoff schematic is an idea, but every accumulation in every token is different. It's never going to be 100% exact. Never. It's like, it's not reasonable to ask to say, well, it's not 100% exact and therefore I'm not going to trade it. That's stupid, because it just never is. It's never going to be exactly this. You know, it's like harmonics. Harmonics never have exactly the perfect proportions, but they still play out. And so I'm not looking at this and going, well, this is exact. Because it's not exact, I'm not going to trade it. I'm actually looking at this, and what it will do is it'll give me more confidence as we go up. If we start forming this SOS, trust me, I'm going to be posting this everywhere, and then people are going to go, oh my God, he's been posting this for months and we didn't trade it, and hopefully we can get a lot of FOMO at the top. That's the plan. That's my secret agenda. So this is quite, I think this is quite interesting. So let's just keep an eye on this and see what happens. But my initial bias, my real bias isn't coming from these ideas. My bias, my true bias is coming from the candlesticks. Yeah, my real bias is the candle patterns and the candlesticks. Yeah. And so if you look at the last 3 months, this inverse, I mean, it's got a wick at the bottom, so potentially you could say it's not a hammer. What would that candle pattern be? Let me just do it. Have a look to get the correct name, because I don't want to get people criticize me for using the wrong names, because there are people out there who like to criticize. It's called a gravestone doji, potentially. Well, actually, no, because it's not a gravestone, because it's got a body. So it's not even a gravestone. That's the problem, isn't it? I think it's a hammer. I think it's an inverse hammer. But if I say inverse hammer, someone's going to criticize me and say you don't know what you're doing. You're making this up. And I am actually making this up. That's the funny thing. It's all made up, but it's made up based on my ideas of what I've learned and what I've experienced and what I'm seeing. I don't know if it's a gravestone doji. It's not a gravestone doji. Can that be a gravestone doji? Anyway, for me, that's an inverse hammer. You got a wick. You shouldn't really have a wick, okay? But whatever. And I think these are bullish. When you get these inverse kind of hammer style candles with long wicks on the top, they're really bullish in the lows, really bullish candles, yeah? And when you have the volume to back those candles, I'm seeing bullish candles in the lows, yeah? And then in my stream in December, I said very clearly, I'm not going to link it, but I said this candle here, this red one here, this 6-month candle was a really bullish candle. And the reason why it's a bullish candle is because it closed above 50% of the previous candle body, of the body. Yeah, that's why it was a bullish candle. I think any candle that closed above the bottom of the candle would have been a bullish candle, but this is significantly more bullish because it closed above the 50%. If this was a bearish red candle, the close would have happened at the bottom here or maybe even lower. Yeah. And what it's basically, oh, it does it again, huh? My undo isn't working. So annoying. Delete like this. Yeah, so, and then if you look at the previous 6 months, you also have this inverse hammer in the lows. That's a bullish candle too. The fact that that candle printed on the 1st of January 23 and the next 6 months and then the next, which we're in now, the next 6 months, we're just ranging inside of that previous candle is bullish consolidation after you've printed a bullish candle. Yeah. And so my bias is coming from candles. When I look at the 12-month candle, again, I'm seeing an inverse hammer at the lows. That's a bullish candle in the lows. Look at the volume on that 12-month candle. It's crazy volume in comparison to the rest of the range. So I'm seeing a really strong bullish candle formation in the lows of these candle structures that are forming. And every time frame is giving me that same vibe. Every time frame is basically saying the same thing. Like, look, this is the 2-month time frame, and I look at every time frame. I look at literally every time frame. I'm seeing the 2-month hasn't closed yet, but we're already above. We're trading above a significant 2-month kind of dividing line. Yeah. Can't undo. It's annoying. Let me try something else. Let me refresh this. Just gonna go to Nasdaq and refresh it. Never mind. Let me just refresh this because I'm getting really frustrated. Look. All right, let me see if I can draw something and undo it. Oh, it's gone to red. Huh? It's weird, huh? It just went to red. It was on yellow and it went to red. Got zombies in my training view. Yeah, it's working now. Thank God for that. So annoying. All right. So that's something to like think about when you're. I think this is a good. It's still good. Like, it's all really good. Every time frame is basically telling me the same thing. If you look at the 4-month time frame, again, you have this bullish reversal pattern here, and then you're having a followed by another bullish reversal pattern. So you're basically getting bullish reversals. This whole structure on the 4-month candle structure is bullish reversal. One bullish reversal followed by another bullish reversal. So, and the great thing about these structures is that these are higher time frame structures that we're forming in the lows. In the future, this whole thing is going to be a really strong support if in the future the price was to come back down. It would be really strong support. So as long as we're making a higher high in this bull market, and that's just to get above $1.56, then we're looking at higher time frame bullish continuation for a higher low. if the price in the future was to get back to the current price, it'd be easy to defend that low, because you'll be basically going from potentially a 400 to million market cap to 1 billion billion dollar market cap, all the way back down to potentially a 14 million. It'd be very easy to defend this token in the lows, very easy, if we make a higher high. So I'm really bullish on TRVL, but fundamentally it's because of the candles. The candles are giving me all the information. Yeah, that's why I'm really bullish. Everything else is just like to give people, it's fun, you know, it's just fun to see what's happening and to comment on the price action. And best strategy for accumulation is dollar cost averaging. I think it's good to create, everyone has to create their own ideas of how they're gonna buy and sell. No one is absolutely correct. No one knows the answer, has the answer. Everyone has to do it based on their own ideas, their own risk appetite, their own portfolios, etc., whatever. And everyone is different. But what I'm saying is that it's quite good to buy red candles, like what I'm seeing in the way the price is forming at the lows. If you buy red candles, you're always going to get good entries, because you're always catching the lows. And if you're averaging in, anyone who's been averaging in red candles basically is going to probably be in profit now. Ever since October is going to be in profit. Yeah. And you're not going to worry about the swings, because you'll see every dip as an opportunity to buy if you're buying red candles. Now, the other thing that I would say, and this trend indicator is looking quite good on this token, this super trend with the EMA. I think I've got it on 200. Let me put it on 100 to have a look. So this is the super trend indicator. Potentially now we've changed the trend for the duration of the bull market. But this could be it. This could be the bottom of the trend. This could be the beginning of the trend. Let me put it on 200, which is what Cactus suggested. So yeah, you see, look, I've never used this indicator, but when you look at the downtrend, you see how it did signify a trend, you know. So I don't know. Maybe now we're going to see the same thing, but for the uptrend. Another good way to enter is the moving averages. I like to use the moving average 50. And obviously the higher the time frame, the better the entry. And you'll notice that on all the time frames, that see on the 3-day chart, you see how it resisted, it kind of almost resisted, apart from this relief rally. On the back test, it resisted and held support, lost it, and then resisted here, and then finally we're above it. You know, it kind of went above, came under, resisted, came above, back tested, and now we're above it. So I see these bigger time frame moving averages, these 50 moving averages. It looks like it's playing a role. I don't usually trade these moving averages, but I think if you were looking for a good opportunity to buy the dip and you're patient, then I would always say that the 50 moving average is a good one. Especially if we start trending now. And if we start trending, then the price will start staying above it, and the 50 will start following, and it will start getting steeper and steeper and steeper. And that's kind of what we want. We kind of want that to happen. Any questions on TRVL? I think. So we're going to have, just so that you guys realize, and I just want to give you guys a heads up, there's going to be resistance at the yearly level. Yeah, just bear that in mind. Like, I don't want people to think that it's just because I'm bullish, I don't think there's going to be resistance on the way up. Yeah, so the yearly level will offer resistance, and that's at 2.85 cents. And usually you'll find these higher time frame wicks will also offer resistance. Okay, so you have one at 5.2 and one at the all-time high. And I don't know, like, you could break it down and go to lower time frames to see where these, yeah, you got, that might be the big resistance at 2.8. It may be slightly lower because of the nuances between these charts, which I've talked about in the past. But that, I think that level is very similar on all the charts. I think that's going to be a big level, and then also that does correspond to the golden pocket. You see that? So that level that I have in mind, which is the yearly level, corresponds perfectly to the 618 of the full extension retracement from the all-time high on MEX C all the way down to the all-time low. Yeah, that's big resistance. Let's just bear that in mind. Now, I wouldn't mind, I don't like the idea of just going up and down. I wouldn't mind an impulsive rally to the golden pocket. I would really love to see that, just to give people a little bit of time to take their profit, you know. Otherwise, some people are asleep and they miss it. It would be nice to get some kind of rally up. And then we've made a higher high on the weekly time frame, which is taking out this high. If we do manage to push up into the golden pocket, then the next thing that I'll be looking for is where the price corrects to find support. That's kind of then what you're looking for. You're looking for the price to correct, to find support. Now, usually these corrections are going to be some sort of ABC correction, usually. If you're looking at an impulsive wave, which could potentially take us to the golden pocket, I don't know exactly where it's going to take us. It could be just up to the 50%. It could be to the golden pocket. It could be lower. We just have to see how the price behaves into those levels. But I think a big level is going to be the golden pocket at 29 cents, because that's also a yearly level as well. And then you'd be looking for some kind of ABC consolidation correction coming out of that level. That's kind of what I'm imagining. And so we'll be looking at potentially, I don't know how it's going to behave, but some kind of ABC like that. And two things to bear in mind about these corrections. Deep corrections are bullish. Extended long corrections are bullish. They're both bullish. Yeah. If you have a correction that's going to now last 6 months, that's a bullish correction. That's not a bearish. It's not bearish just because it's taking a long time. And if you get a deep correction, if suddenly we all, from 30 cents, we go all the way back down to test this 236 at 5 cents, that's bullish. And the reason why that's bullish is because anyone who's captured profit at 30 cents will be looking to put all of their value back in at 5 cents. That's why it's bullish. You've got to bear that in mind. Yeah. People aren't going to be taking profits in the first impulsive move up and not be looking to reaccumulate after the price has found support at lower levels. Why? Because we're not at the end of the cycle. We're still at the beginning of the cycle. We're still, you know, we've just turned the trend. We're now looking at an uptrend. In an uptrend, people will be looking to buy the dips. So actually, then it will depend on how aggressive or how bullish people are as to whether they let the price get lower. And then the lower it gets, the more aggressive people will be in buying, especially if they've been able to take good profit at the higher of this expansion. Yeah. And so you have to be thinking about that, because if someone suddenly takes a lot of profit at 30 cents, they'll be looking to put all of that, maybe not all, but a lot of that back in, because then it would be like they've doubled their TRVL portfolio. And the people that will be selling will be the ones taking profit, but you're also going to get some people who come in late, who don't really understand how the markets are going to behave. They'll come and buy late. They won't have a trade plan. And those are the people that are going to sell. The people who are trying to just catch the rallies, and they always come late. The late longs always get punished. And so they're the other types of people that are going to be selling. But as long as enough of us who are accumulating at the lows are willing to take profit into those higher levels, and if we're willing to allow the price to come back and are willing for us to put the value back in to defend the lows, then we can nicely form some kind of consolidation. I don't know how it's going to form. If we are looking at if we go up all the way up to 30 cents, then potentially we are looking at an Adam and Eve, and then it could come back to test the neckline. Yeah. And then if we are forming a Wyckoff schematic, then it potentially could be even more bullish, because instead of coming back, you'll now be, and this could be a little bit higher, consolidating underneath the golden pocket. So we'll see how the price reacts off the golden pocket, really. Because if you go up and you start consolidating underneath the golden pocket in an extended period like that, that's ultra bullish. That's like a flag consolidating underneath resistance. That's like the most bullish scenario will be some sort of higher time frame flag or pennant underneath a big resistance level. If we correct much deeper, like an ABC, still bullish, but it just means we'll have different targets for the next move up. So in terms of future bullishness, and it will all depend on sentiment and supply and demand. It will all depend on people taking profits. Do they quickly put their money back in because they don't want to, they're happy with taking at 30 and putting back in at 17? Or do they wait longer because they're looking for that? It's all psychological behavior when it comes to buying and selling. But an Adam and Eve correction could come back to retest the neckline somewhere here. Like, it's probably a little bit of an area, and somewhere maybe even as far down as 9 cents. A more bullish Wyckoff schematic correction is going to be basically a really strong flat correction consolidating underneath a major resistance level. Actually, I said this was the most bullish. That's not true. The most bullish scenario. So we're just contemplating bullish scenarios now. The most bullish scenario. I'll just get rid of this again. Is going to be to get straight above the golden pocket and to consolidate above it. That's the most bullish scenario. Yeah. And actually we saw that with Solana, because when I was looking at Solana earlier, on the higher time frame, you can see that Solana has done that. See that? So Solana has managed to get above in the first in this impulse, has managed to get above the golden pocket, and now you're actually consolidating above the golden pocket underneath the 786. This is more bullish. This is probably the most bullish of all of the scenarios, simply because the golden pocket, which should have acted as resistance, didn't hold. There was too much demand. All right, any questions about TRVL?